For those who've been following it, Bitcoin kind of been trading sideways for quite some time. And there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, 70, low 70s was the top. And I always sensed that when it did break through the 73, 72, 73 area, it was going to squirt higher. And boy, it sure did. It kind of straight line from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So,
following a week of excitement and conjecture, the financial markets are blazing with discussion about the future of gold and Bitcoin. Once again, prominent sound money proponent and strong supporter of the fiat monetary system, Lawrence Lepard, has offered his audacious predictions for these assets' future. Lepard predicts that the price of Bitcoin may experience a brief decline, maybe hitting $73,000, before launching into a strong upswing that could see its value rise to an incredible $200,000 by 2025. Lepard described in a recent interview how the devaluation of fiat currencies, growing debt, and waning trust in traditional banking are creating the conditions for a significant move toward gold and Bitcoin as safe haven investments. Lepard's thoughts are in line with a more general belief that traditional markets are about to face a day of reckoning, with sound money assets positioned to profit from the consequences. We'll examine his thoughts on the direction of Bitcoin, the prospects for gold, and his assessment of the difficulties of the American economy under the current government. Be sure to like, share, and subscribe to the channel for more expert analysis and insights. Let's hear his following words.
These guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent $6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those 4 areas, and they might touch defense a little bit because they might be able to end the Ukraine war, it's going to be hard to cut. So the remaining 20%, even if you take 30% off that, that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem, and the debt growth is a real problem. So they're going to have their hands full.
It's a real problem for, I guess, the economy overall, but could it be a boon for certain assets?
It could be. It could be indeed, especially if they end up going to yield curve control and printing money to address it. And I think that's what's going to happen. It's obviously today isn't reflecting that because gold's down $80 and Bitcoin's soft and so forth. But, what I've been maintaining up until today, and I still do longer term, is that we are in a sovereign debt crisis. The fiscal situation is out of control. And you're really seeing this when you compare, the last 3-year performance of Bitcoin or gold to debt. And I just did some charts on this, which are on my Twitter feed for this New Orleans conference. In gold terms, compared to the bond, the gold's up 170%, in 3 years, and Bitcoin's up 3,000% in 3 years. And what this tells you is that the bond market is, in my opinion, in the process of failing. I mean, one thing that's interesting, as I know, is that they cut interest rates, the Fed cut interest rates, and yet, the 10-year has gone up 75 basis points. So that's not supposed to happen. And it tells you that the Fed is probably too loose. And yet, because they are, the ones setting the short-term rate, and Janet's using the short-term market to fund a lot of the debt that's rolling over, they're under a lot of pressure to keep cutting rates in an effort to, make the U.S. funding costs not go up, because interest expense is running at a $1.2 trillion rate. They certainly don't need that to get worse. So, they've got a lot of things they'll do, though. I mean, Bacenta's got an interesting trick up his sleeve. He's talked about maybe, Powell's term doesn't expire until early 2026. And Bacenta's talked about maybe appointing his successor, but, announcing who his successor was going to be beforehand and letting that guy give speeches. And so, in a sense, it'd be 1 year out forward guidance. It's an interesting concept. So the Fed and the Treasury are going to, quote unquote, have their hands full, in my opinion, in the next 6 months. And particularly if something happens to the stock market. I mean, for those of us who are market historians and have looked at the market, valuation wise, I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make this entire situation, it's going to turn it into a mess.
Lawrence Lepard is warning that the U.S. stock market is about to have a day of reckoning. He thinks that a huge bubble is about to collapse and that the market is dangerously overpriced. The imminent collapse, according to Lepard, could be just as catastrophic as the dot-com disaster, wiping out tens of trillions of dollars virtually overnight. As a result, Lepard believes the Fed will step in with extraordinary money printing, or what he refers to as the big print. He cautions that the conventional financial system as we know it may come to an end as a result. Lepard is certain that Bitcoin, gold, and other safe haven assets will undergo a sea change, but he views this as a disaster for equities, bonds, and other conventional assets. He asserts that Bitcoin will be a key component of a new financial system, and that the days of the fiat monetary system are numbered. Here's more of Lepard's enlightening interview.
The more important thing to me that I found so interesting was just how strong and persistent the breakout was. And for those who've been following it, Bitcoin had kind of been trading sideways for quite some time. And there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, 70, low 70s was the top. And I always sensed that when it did break through the 72, 73 area, it was going to squirt higher. And boy, it sure did. It went from, it kind of straight lined from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there, but obviously today it's getting hammered, and it wouldn't, it's not unusual either for things that break out to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term, store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started when it was kind of trading around 50. I mean, the bottom was 15, as you know, after FTX, but it kind of based for a number of years around 50-ish, 50, 58. I don't have a chart right in front of me, but and the history of these cycles is they tend to go to 4, 5, 6 times the base. So that would imply that we could get to 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity, because backtesting the power law model has described 97% of the movements. It's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is 0, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90. I think it'll be much higher in 5 or 10 years, but between here and there, it could go up and down a lot.
Okay, so basically, 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x, and it's not just the x; it's kind of the standard deviations off the base. This is the power law model, but there were some of the earlier cycles you actually got like 9x off the bottom. off the base. But it's, with each, as it grows up, as more people hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown I think was 90 some odd percent. More recent last drawdown I think was 70-ish, and I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed.
Lawrence Lepard discussed his opinions on the long-term prospects and recent breakout of Bitcoin. He pointed out that before breaking through the $72,000 to $73,000 resistance level, Bitcoin had been trading sideways for some time, bouncing between $58,000 and the low 70,000s. After that, Bitcoin quickly rose to $99,000 in a short period of time. According to Lepard, Bitcoin has a history of powerful, sustained breakouts, which are frequently fueled by momentum and FOMO, fear of missing out, during its bull runs. Lepard is still optimistic about Bitcoin's rising trajectory, despite his expectations of short-term volatility, including possible retracements to establish a new base. Because he based his estimate on Bitcoin's power law growth model and its historical 4-year halving cycles, his final objective for this cycle is approximately $200,000 and possibly higher. Lepard stressed that although Bitcoin is still unpredictable, its overall trend is sharply rising and that, like gold, it can be used as a long-term store of wealth. He advised investors to hold through the ups and downs, adopt a long-term perspective, and dollar-cost average their purchases. He noted that Bitcoin's gains and losses should eventually level off as the market develops and adoption increases. Keep Lawrence's advice in mind if you're thinking about investing in Bitcoin. Consider the long-term and the dollar-cost average. Although there will be volatility along the way, history has shown that patience is rewarded. If you found this video valuable, please like, share, and subscribe to the channel. Don't forget to turn on notifications for more expert insights on Bitcoin and the future of finance. See you in the next video.